Here are 50 top pieces of advice from Warren Buffett, the legendary investor and CEO of Berkshire Hathaway. 1. Risk comes from not knowing what you're doing. This means you should only invest in things you thoroughly understand. Don't invest in complicated things just because they seem lucrative. Stick to investments you comprehend. 2. It's far better to buy a wonderful company at a fair price than a fair company. At a wonderful price, focus on buying stock in outstanding, high-quality companies. Don't chase mediocre companies just because their stock price seems cheap. 3. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Only invest for the long term. Don't buy stocks you'll panic and sell if their price drops. Be content to hold stocks for 10+ years. 4. Our favorite holding period is forever. Take a buy and hold strategy. Invest for the ultra-long haul and decades into the future. 5. The most important quality for an investor is temperament, not intellect. Controlling emotions and having discipline is more crucial than being brilliant. Don't panic when the market dips. Stay rational. 6. Be fearful when others are greedy, and be greedy when others are fearful. Buy stocks when everyone is pessimistic and fleeing the market. Sell when optimism is rampant. 7. The stock market is designed to transfer money from the active to the patient. Trying to time the market and trade actively hurts returns. Patience wins. Hold stocks for long periods. 8. You only have to do a very few things right in your life so long as you don't do too many things wrong. Investing is simple, but not easy. Just a handful of key habits repeated over decades will yield great wealth. 9. Price is what you pay, value is what you get. Focus on paying a good price relative to intrinsic value, not the sticker price. A wonderful business at a fair price is superior. 10. Someone's sitting in the shade today because someone planted a tree a long time ago. Past efforts compound over decades. Sow seeds today for a better future. Play the long game. 11. It takes 20 years to build a reputation and 5 minutes to ruin it. Your reputation is one of your most valuable assets. It takes a long time to build a stellar reputation of integrity and smarts, but you can destroy it very quickly through dishonest or unethical actions. 12. The difference between successful people and really successful people is that really successful people say no to almost everything. To become super successful and productive, you have to ignore almost all distractions and temptations, and have strong self-discipline to stay focused on you. 13. We enjoy the process far more than the proceeds. Focus on the day-to-day process of running a business and investing rather than simply making money. Enjoy learning and the challenge. 14. Only when the tide goes out do you discover who's been swimming naked. When times are good, many flaws are hidden. It's only when things get tough that you see who really has issues in their business or strategy. 15. Calling someone who trades actively in the market an investor is like calling someone who repeatedly engages in one-night stands a romantic. Active trading is more gambling than investing. True investing is buy and hold for the long term based on value. 16. The most important thing to do if you find yourself in a hole is to stop digging. If you find you've made a mistake or are losing money, stop making it worse. Don't throw good money after bad. Alter your strategy. 17. Opportunities come in frequently when it rains gold. Put out the bucket, not the thimble. Great opportunities are rare. Take aggressive advantage when they come rather than dipping your toe in the water. 18. You should invest in a business that even a fool can run, because someday a fool will. Buy simple, easy-to-run companies. Complicated businesses dependent on genius managers will fail when leadership changes. 19. Why diversification is only required when investors do not understand what they are doing. You only need a broad portfolio of many stocks if you don't understand company analysis. Otherwise, you can focus on just a few. 20. Look at market fluctuations as your friend. Rather than your enemy, don't fear market volatility. Use down days as a chance to buy great companies cheaply and ups as a chance to take profits. 21. Time is the friend of the wonderful company, the enemy of the mediocre. Great companies become more valuable over time. Mediocre companies see deteriorating fundamentals. Time magnifies the difference. 22. The best thing that happens to us is when a great company gets into temporary trouble. When a great company has a setback, use it as a buying opportunity. The issues are usually temporary while strength endures. 23. The way to get started is to quit talking and begin doing. Stop overanalyzing and making excuses. Take action and get started investing right away. Learning comes from experience. 24. Never depend on single income. Make investment to create a second source. Don't rely on your job alone. Use savings to invest and generate passive income. Multiple income streams provide freedom. 25. Do not save what is left after spending. Instead, spend what is left after saving. First, pay yourself by saving regularly. Only spend disposable income left over after saving. Build the savings habit first. 26. Chains of habit are too light to be felt until they are too heavy to be broken. Bad money habits seem harmless at first, but they quietly compound until they are very difficult to change. Be aware of habits. 27. There seems to be some perverse human characteristic that likes to make easy things difficult. Don't overcomplicate investing. Simple strategies executed consistently work very well over decades. 28. You only have to do a very few things right in your life so long as you don't do too many things wrong. Just a handful of priorities done consistently can bring success. Avoid major mistakes and catastrophes. 29. Should you find yourself in a chronically leaking boat, energy devoted to changing vessels is likely to be more productive than energy devoted to patching leaks. If your strategy has fundamental flaws, don't waste time on band-aid fixes. Change approaches entirely. 30. Wall Street is the only place that people ride to in a Rolls-Royce to get advice from those who take the subway. Ironically, the best investors are often not on Wall Street working for big firms, but are independent thinkers. 31. The business schools reward difficult, complex behavior more than simple behavior. But simple behavior is more effective. MBS and academics favor complex tactics and strategies. But simple, timeless principles work better in investing. 32. Risk comes from not knowing what you're doing. If you thoroughly understand a company and its business, then the investment is not risky. Risk only comes from lack of understanding. 33. Diversification is a protection against ignorance. If you are unsure which companies will do best, diversify broadly, but if you understand them, concentrate into just a few. 34. Someone is sitting in the shade today because someone planted a tree a long time ago. Past efforts pay off years later. Make wise investments for the future benefit, even if payoff is far away. 35. It's better to hang out with people better than you. Pick out associates whose behavior is better than yours and you'll drift in that direction. Surround yourself with those smarter and more successful than you to elevate your standards. Their habits will rub off. 36. I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over. Focus on easy decisions first. Save the close calls and tough decisions for later after clearing the simple hurdles. 37. You only have to do a very few things right in your life so long as you don't do too many things wrong. A handful of key good decisions, repeated over and over, will bring success. Avoid big mistakes. 38. There's class warfare, all right, but it's my class. The rich class, that's making war, and we're winning. The wealthy have rigged the system in their favor through lobbying and tax laws. This quip is uncharacteristic of Buffett. 39. Of the billionaires I have known. Money just brings out the basic traits in them. If they were jerks before they had money, they are simply jerks with $1 billion. Wealth doesn't change someone's character. It merely amplifies who they already were. 40. I buy expensive suits. They just look cheap on me. Buffett is well known for his simple clothes and frugal habits despite his immense wealth. This quote exemplifies his humorous humility. 41. Price is what you pay, value is what you get. Focus on the intrinsic value of a company, not its stock price. A great business bought at a fair price is the goal. 42. No matter how great the talent or efforts, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant. Certain things can't be rushed. Allow enough time for investments to develop. Compounding takes decades. 43. We simply attempt to be fearful when others are greedy and to be greedy only when others are. Fearful, be a contrarian investor. Buy when everyone is panicking and sell when they are euphoric. 44. I don't have to be an expert in every field. I just have to be able to evaluate how good the people telling me about the field are, and whether they have an interest in misleading me. Success requires judging expertise in others and assessing if they have an incentive to distort facts. 45. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Guard your reputation closely since it is hard-earned but easily lost. This should guide your actions. 46. If past history was all there was to the game, the richest people would be librarians. The future is never identical to the past. Adapt. Be forward-looking and don't simply rely on history. 47. The most important investment you can make is in yourself. Building skills, knowledge, and developing your talents is the top priority. Money comes later. 48. Only when the tide goes out do you discover who's been swimming naked. Adversity and challenging times reveal weaknesses that remain hidden when times are good. 49. Predicting rain doesn't count, building arcs does. Talk and analysis doesn't mean much. Take practical action and prepare for future scenarios. 50. The most important quality for an investor is temperament, not intellect. Mastering emotions is the top requirement, well above raw brain power. Stay rational, calm, and disciplined. Thanks for watching. Please like, subscribe, and let me know what actions you will take.